this book and read it on the beach in one day, and every single one of the pages is like earmarked and written up. And I was like, I've got to dive into this framework. And so what I loved about your system was it gave me an idea and a way to think about every single step of the process. And so I'm really excited. We've been diving into analyzing, positioning, architecting, executing, and iterating for some time through the book. But we do have some questions that we would love to get to. But first things first, we really wanted to hear kind of your 3 to 4 minutes or whatever you want to spend on each piece of it. And then we can dive into some questions afterwards. I think we've got some great ones.
Yeah, sure. It'd be great. Happy to. So just interrupt anytime you have a question here. But essentially what I found is that a lot of people raising capital are just reaching out to their Rolodex, going to a couple local events, just working a crowd they already know, or just cold calling on strangers. And they found that to be painful in terms of progress and people just not calling them back. And then I saw now we've been running the Family Office Club. I started this in 2007. We've hosted 150 investment conferences and workshops. And every year my team's interacting with about 45,000 professionals. We've met with thousands of investors in person. And the point of explaining all that is that I see that a lot of things just look like what everyone else is doing. So it just looks like noise in an email inbox. It just looks like, oh, I've seen this email 100 times before. And the problem is when you go to raising capital from your brother-in-law and a best friend or reaching out to a stranger, what strangers are you going to reach out to? Maybe ones you're able to find contact details for, maybe known investor entities. Well, everyone else is also reaching out to those same investors. So now your competition went from almost zero to, you're having hundreds and hundreds of pitches coming at these investors. And so that's a huge jump. And the point of this system was to really sum up a number of things I'd seen while running the Family Office Club after the first decade. I wrote this book probably 5 years ago now. And if you don't have really strong positioning, then you're really lost and you're just going to be working a lot harder than you need to. You want someone to lean forward and really say, wow, that's just for me. Or that, it hits them right between the eyes with value, or they say, oh, that's refreshing. I've never seen anyone offer that before. Or I didn't know anyone did that for a group like us. And yeah, that seems like a perfect fit for what our common complaints and headaches are. But then while writing the book, I realized that the positioning will be worthless if you haven't done a lot of analysis of the marketplace. So I put analysis as the first step of the 5 steps, because if you haven't done the analysis, and the positioning is just going to be off. And whatever positioning you choose, it might be off or slightly off, but you just have to learn that over time. But on the analysis section, it's really analyzing yourself and knowing your strengths, analyzing the competition, like what is everybody saying, what's everyone promising, and also what are all investors complaining about or asking for and not getting. So what are the investor headaches that you could be Excedrin for and solve, but also, how can you be different from competitors in a way that plays to your strength? So it's not about playing the same game as 1,000 other multifamily people. It's about designing your own game, targeting a unique investor set, and between your unique positioning, who you are as an individual, who your team is, and that investor set, you're different from the competition in a way that matters a lot to that very specific investor. And I found that most people aren't willing to focus on a specific investor type. They want to work with everybody. A lot of people don't want to spend any time on positioning. They'd rather spend $20,000 a year in plane tickets or sponsoring conferences for $10,000 a pop versus doing things that cost absolutely nothing, like having a 1-sentence description of your offering, which is unique from your competition, valuable to your niche investor, and is really dialed in based on your positioning. That costs nothing. A lot of people have a brand that's absolutely worthless in terms of bringing in investors, and they'll call it Wilson Capital or some Greek god capital, and no one knows what that Greek god means except for your spouse, because you've explained it 3 times to them, but no one else ever asks you what it means, I find. And so we encourage people to get rid of a name that doesn't do anything and use a name that sweats for you. So when you say your name, it makes people lean forward and say, oh, I'd like to learn more about that, or that sounds like something I would be maybe interested in. And you don't have to have that. People grow to $1 billion in assets without any of those things. but why not have it sweating for you if it doesn't cost anything to put in a name of a brand name that's going to attract investors based on that positioning and based on what you know is a gap in the marketplace. So those are some of the beginning things. With positioning, I found that people get very excited about saying, hey, we're going to be positioned as the #1 in self-storage in San Diego, or we're going to be positioned as, the #1 hospitality group in this area. But actually doing the homework to strengthen your position is where people don't really like the recommendations too much, because everybody's busy. And so when you choose a position, anybody can also choose that same position, because all you've done is verbally say you want to do something. But until you've defended your position and built up walls around it, it's just open for anybody to wander into that and join you and now be your direct competition. But if you build up walls around it, then others are going to look at what you've done and say, well, maybe I should do something slightly different, because that position is really secured already by Andy or by Alex or whoever. And so they're not going to want to compete directly because of the walls you've built around your position. And related to architecting your position and strengthening your position is just making sure that you know that your credibility probably goes way up the more niche focused you are. If you say, I'm buying properties across Florida, Texas, and I don't know, Nevada, it's 3 different states. And if you have 4 people on your team, how are you covering those 4 different states? Maybe you have a really good answer to that, and you're only going into a very, very niche type of thing, such as parking lots or parking garages or something. But for a lot of people in real estate, I find that being more focused just means it's more credible of a story. Like you could say, we only do senior living and only in Houston, and we know the 132 assets and the owner of those assets, and we're on a first name basis with them, and we know how to value them quickly, same day, etc. And the people who don't have traction yet, who focus more, just have a more clear story, and it's more credible that a small team would be all over a little niche versus saying like, oh yeah, we're aware of all the properties in Texas that are on the market. No one human brain is, because there's too much going on. So unless you have a huge team, the investor's just not going to believe that in their gut, and they're not going to think like that's as credible as someone who goes super niche, I think. And then, in terms of architecting the position, the homework is really building up your investor funnel. So how are you going to attract investors consistently? And it's by going to, once you know who your target investor is, where do they congregate? What books do they read? What do they search for on Google, on YouTube, on Twitter, on Amazon? Do they even go on Twitter? Are they on Instagram? Maybe not for some types of investors. Are you attracting law firm partners or business owners or doctors or surgeons? And then you can back into what you're going after. And just so you guys know, I didn't just write the book just to write a book or just say the stuff just to fill pages. Like, we believe in this a lot, and this is everything that we do. So we attract investors by going where they are on these different platforms. And when we found that doctors and dentists were investing in some of our projects through our clients, and we wanted to work with more of them, we've built up our funnel in that area. And we have partnerships in place with 3 different dentist doctor, investment club groups that we're just bringing to life right now. So 2 of them have signed agreements. The other one we're building a relationship with. I also launched as a joint venture. I had a friend that ran a marketing agency for 10 years on healthcare and technology, and I convinced her to focus on only doing marketing for doctors. And I helped her name it, and then we called it marketingdoctors.com. And I don't really care about the equity stake so much as just every time she works with a new client, I'll have access to that doctor as well. And in her marketing agency now called marketingdoctors.com, she's signed a partnership that I helped her negotiate. And she didn't see the angle at first, but you guys can start thinking this way if you're not already. We were able to go to an association of 3,900 doctors and say, we'll do your marketing in exchange for sponsorship exposure to your 3,900 physicians in the state where I live. And now she has access to clients in the state. I have access to more investors in the state, and it deepens the funnel on that niche. The other example is the how to start a family office niche. We built a whole lot of IP around that, and videos and articles and speeches and trainings. And I wrote a book called How to Start a Family Office. We also, in the niche of centimillionaires, everyone's obsessed with billionaires, but there's only 2,000 of them, and they have 100 gatekeepers and huge egos and 500 LLCs. So instead, there are 55,000 people that we know of on planet Earth that are worth 100 million plus, called centimillionaires. And to build our funnel around that positioning, we bought centimillionaires.com, wrote the first book on centimillionaires, did tons of videos, about 30 different podcast interviews, white paper, infographics. We named our RIA Centimillionaire Advisors, and our book is solving the top 5 headaches of 100 million plus net worth families. And our book got kicked off Amazon at one point because we called it Centimillionaire Migraines, because we were providing Excedrin for the headaches of these 100 million plus, but Amazon thought we were deceiving people and saying the word migraine, and they took offense to that, I guess. So, but we've attracted clients in this way. We don't cold call investors. We try to position so they're cold calling and emailing us. And, I started this in the basement studio of a house in Harvard Square without enough money in my bank account to pay my rent. And last year we did just under 5 million in revenue, and we brought in 140 million in wealth advisory assets under contract. And we've done about 19 million in direct investment equity deals so far this year. And I guess the last part I would say here is that in the book, there's some advice on executing and iterating the plan, because it's never going to be perfect to begin with. But if something does have traction, then it doesn't mean that you can't have a DBA after 2 or 3 years of getting traction on something that's really working, and you build out your team. Just like me working with doctors and dentists, I'm not abandoning my core business, but it's an added on niche. But I'm not going after 5 niches at once. I didn't start out going after how to start a family office niche, centimillionaires, doctors and dentists. So, I think that the book really fleshes out some of this a bit more. And, we do a 5.5-hour workshop covering what I just talked about for 10 minutes there. So I just skipped over like almost everything, but I'm happy to answer questions. And especially if you guys just, maybe 1 or 2 people are super skeptical or just don't see how it applies to you or something, I'm happy to try to help make it more valuable if it's not really seeming applicable to your situation.
So I'm actually pretty curious about getting into funds. Do you have any background in doing funds at all?
Yeah, we have 700 people in the Family Office Club that pay either a monthly or an annual fee, and probably 1/3 of those people run a fund, and they're raising capital for a fund. So I've helped my investors invest in funds, and we've had some of our investors invest in funds this year. I think it's just a trade-off of, if the fund is set up so what 3 assets are going into the fund, then there's great transparency. Otherwise, you have to have a really amazing track record, an amazing strategy, an amazing team, because then otherwise the investors don't know what their money is going to go into. You're basically just promising them like, hey, I've chosen good things in the past. Trust me, I'm going to put your money to great use. But all else equal, a lot of investors would rather put the headache on you to go around and herd cats under a 60-day LOI, rather than put the headache on them of, hey, please trust me, we're going to put your money into good things. Typically, people could raise capital faster choosing the headache of herding the cats and to meet the deadline to get the raise done. And it's all else equal easier to raise capital that way. Like, we have a couple clients, one has 400 million in assets, one has 200 million in assets. And both of them thought they could raise a fund after that much assets under management. And they're both struggling to even raise a $10 million fund. And the one that 250 million in assets, they've only been able to raise 1.5 million of the 10 million. And that was all from past investors who first came in direct. They trusted them to go into the fund, but new investors want to go direct to get to know them. But some people are very successful running funds and, manage billions of dollars doing it. But all else equal, I see it a little bit easier to raise things deal by deal, because then they have full transparency on what they're getting.
Yeah, I recently interviewed a syndication lawyer, about this specific type of fund called the deal by deal segregated fund. And I asked him, I'm like, is it only high net worth people that have success doing funds? And she said, really, you need to have a marketing machine. And if you want to have a fund invest with you, sometimes, or, a big family office would rather then invest in your fund, they'd like to invest side by side with you in a syndication type of deal. So I thought that was kind of interesting, but I'm not sure if you've ever heard of the deal by deal segregated fund, where people actually have access to decide whether or not to invest in a particular asset within the fund and yet still have the capacity to diversify
I've only heard
the
about
sponsor's assets.
single deal funds. I haven't heard of deal by deal funds that have that optionality built in, but that's good that you connected with someone like that, because a lot of syndication attorneys who are big on funds is because they want to charge $30,000 to put together a fund, and it may or may not be in your best interest. But that sounds like something pretty interesting. So that is one of the big objections of investors. And the other option is to say, for your first investment, you can come in direct, but by the third investment, you either like us or you don't. So you can only come in through the fund after 2 investments, or, something to have that option there, and they get better terms if they come in through the fund. That might be an option to consider.
So Richard, you might want to connect with Ruben. He has an incredible podcast called The Capital Raiser Show, and has had amazing guests on there. I think you'd be a great one. One thing that I am thinking about a lot is, I love how you break down the analyze section. Not only do I need to look at our competitors, I need to look at the market, I need to look at the investor, but also yourself. Self-reflection is so crucial. I haven't heard this, but why did you kind of add in, you always hear about competitor, market, the SWOT analysis piece of things, but then you said analyze your own form in this creation story. I know you're an avid reader, and I'm curious to hear where the story for you came about this part of analyzing your own firm.
Yeah, I think it's just so you have a built-in competitive advantage that others can't compete with. I think, like in Jim Collins' book, he talks about only doing things where you have the DNA, the natural advantage built in, but also you're passionate about it, and you could also make a lot of money. And if you're missing any one of those 3 things, then somebody else is going to eat your lunch or run circles around you. And then I've studied, been mentored by Dan Sullivan a lot. He talks about the concept of unique ability, like only doing things that you're excellent and passionate about. And then also, when I'm looking at opportunities, I look at things that have big future demand or inevitable bigger future demand than they do now, but low competition, and it plays to my strength. And so when you combine all 3 of those concepts, then it just allows you to take a position that, well, everyone else is like trying to serve everybody, or there's just generic position because they're a big successful firm with, billions in revenue, then they're not super dialed in to serving one niche group. And a lot of people get hung up on that, and they think, oh no, we can't change our brand, we've been around for a while. So even when they hear these ideas, they don't act on them. And the people who are doing very well don't need them because they're getting a lot of referrals, so they don't act on them. And so there's very few people that position their firm very well. And I just think I'm kind of a past kind of self-improvement junkie, so it's just kind of top of mind to be thinking about, like, if you're going to spend your energy doing something, you might as well do the thing that other people won't be able to compete with because you're really good at that one thing.
Yeah. All right. I'm going to ask one more question, and then I'm going to let somebody else ask you a question. I've got a ton. This idea, I remember sitting on the beach, drinking a White Claw, thinking about what my choke points could be. And this was last March, actually. And I'm happy to say I think I found a strategic bottleneck that we have controlled here. But can you give us some examples of different choke points, maybe with some of your real estate clients that you work with, or just in general? But I'd love to hear some more ideas or thoughts around some of the best choke points that maybe you have come across recently.
Yeah, sure. I'll rattle off a whole bunch. So one would be getting familyoffices.com for $10,000 like a decade ago. I think that was pretty cheap buy. On the other end of the spectrum, I bought commercialrealestate.com for $470,000 2 months ago. And then in the middle, I've, the book, How to Start a Family Office. If you're the first person and the only person on planet Earth who's hit your prospect between the eyes, like the only book on centimillionaires, then that is going to help bring attention and bring credibility. That just took time. Also, writing some of the first white papers or most in-depth white papers. Like we had one go viral on family offices in Singapore, and we had 23,000 people view that white paper within just about 1 week. And that was 8 years ago when that happened, but it created a bunch of connections and was a good example of that. And so many times I think of how do you be in a position first and then secure that position with the choke point. So with LinkedIn, we had our family office club group on LinkedIn, and it was growing organically. We had a private equity group and a hedge fund group, and they were growing organically. And we saw back then you could download all the email addresses of everybody who was joining your LinkedIn group. So it was basically like opt-ins coming in just organically all the time. And so we saw how valuable that was. So we started 5 more groups, and then we went out and found the largest groups in finance and investments. And we found ones that were not branded and were in a country like Pakistan, Malaysia, India, where, you know, $3,000 is a lot of money. And we would approach them and say, hey, I don't know how much this is worth, but would be willing to buy your LinkedIn group if you're willing to sell it to us. And we bought up 42 different LinkedIn groups. And now we own more groups in high finance and investments on LinkedIn. And the most we spent was $10,000 for a 51% equity stake in a 150,000 person group. The other ones were all 1,000, 3,000, you know, like not a ton of money. I started this with absolutely no money. I had like negative money to spend. So the choke points don't have to be expensive things, but once you have it locked down, you're making it painful for someone else to enter your sandbox, and you're making it so the next person who comes along has a harder time being the guy who's known for, or the lady who's known for that niche thing.
Wow. Okay. Yeah. These are some fresh ideas we have not seen. You've got some LinkedIn, you know, I wouldn't say gurus, but we're definitely active on LinkedIn. A lot of the folks here in this group are. So we love that platform. We've been utilizing that platform a lot recently. So thank you for sharing that. I didn't even think about going in and owning LinkedIn groups. Now you got my wheels spinning. I'm going to let somebody else ask a question. If you don't, just know that I'm going to jump in with 3 other ones, and I won't give you the stage until then. So John Blanton, you want to jump in and ask a question?
Yeah, no, obviously the book was outstanding, but one of the key points that really stuck out to me was the iteration and the really understanding of listening to the audience. And so just, I guess if you could give a better perspective of how long you kind of look at a process and see if it needs tweaking, and any specific KPIs you look at to determine, hey, is this working or is this not working in a process?
Right. Part of it's a gut feel and how valuable the client is. So like the centimillionaire niche, still almost nobody knows what that term means. So 40,000 people a month search for billionaire, and only 700 a month search for centimillionaire. But when I got started in family offices, nobody was using that word either, really. And so it's a really long-term play, but just attracting one client every 6 weeks or even one every 3 months would still be worth being in that niche, because we're already working with people in that niche. So that's going to have a different type of ROI needed. And it's a long-term play versus going after doctors and dentists. You know, it'd be smaller tickets, smaller investors. So I'm looking for things that'll move the needle because we need more volume in order to make progress there. At the beginning, it was simply what was going to pay the bills and, you know, keep the lights on to keep things moving. And so the niche we were focused on is really just being the most educational website on, you know, first family offices, and then single family offices, and then how to start a family office. So we niched down further and further, just like you might start with business owners, then you might start with only business owners in Nevada, but maybe that have 10 employees or more, or are part of YPO or EO or Vistage or some sort of association. Maybe your background's in manufacturing, and you know that all the people that pay $15,000 a year for this one, you know, industry group are all pretty high net worth, and you'd have something in common with them on what you're doing with your real estate business. So that would be some of the things I would keep in mind. We don't have a KPI where it's like, oh, this one is green lit and let's try 5 at once and see if this one made it or not. At the beginning, we're very focused on one at a time. Now we maintain our old ones, and we'll layer on a new niche position maybe once every 12 months or 18 months on average. That is synergistic with everything else we're doing. So everything we've learned before adds to that niche, and we can repurpose education for that niche. And by getting better at that sub niche, it's helping our greater platform grow because a dentist doctor can still benefit in a larger investment event, just like a centimillionaire could. And I saw a question come in on the valuation of the website from Jerome. In 2008, in October, we started negotiating for the purchase of that website, and they wanted $1.2 million for it. And then the pandemic hit, and I'd approached them every like 6 to 9 months over 12 years. And then the pandemic hit, and we negotiated the $470,000 price tag. So I don't know if I overpaid, but I think we'll do that much revenue on it in the first 12 to 18 months, I'm hoping, so who knows what it's worth. But my goal is to be a huge pain in the ass to CoStar until they buy me for $100 million, even if that takes me 30 years, who knows, right? So I think like CCIM is well respected, but besides CCIM, what really well-known membership related educational commercial real estate investment community is there? There's Bigger Pockets, which has all their forums and stuff, but I don't know. I don't know if there's like a lot of competition for CCIM. Not that we're doing a designation, but like just as a respected CRE platform, we're trying to build something of a community of sorts on that I think will be worth more than 470 one day.
It's fragmented, Richard. So there's a lot of multifamily syndicators that will have their own mastermind groups, and those groups will have their own kind of, their own buy-ins to be a part of that group. But other than, and I'm a real estate broker as well, and I am not a part of CCIM. I go to their events and hawk all the people that go, but I don't pay for it, and I haven't gone to anything. My buddy is on the board or the president of CCIM here in Kansas City. But that being said, I think that could be an interesting choke point, and one that would be awesome to explore. So great idea.
Yeah, and to your point, we don't see CCIM as competition because we're not doing a designation. So we're speaking to them about how do we work with them on their podcast, or how do we help them and have us mentioning CCIM or having CCIM badges on our website. And they're very big and bureaucratic, and the talks are going slow, but they have an interest in at least talking about it. So that would be something we're trying to work with them, not kind of against them, because it'd be different.
Yeah.
So, Richard, is the play to flip that?
I mean, long term, I think like I'm only 38 years old, but I've been doing this for 13 years, and I plan on running things with the intention to make them successful over the very long term. So I'm not really looking to flip it like in the short term, unless somebody just offers me something ridiculous and I can't say no. I'm really looking to make our brand, it would become one of the top 3 brands globally in the family office industry in terms of name recognition for Family Office Club, but it's a very small niche. So what we're doing is trying to build a funnel around commercial real estate. And if any of you would like exposure, we came up with a cool strategy. And what we're doing is finding very niche commercial real estate industry experts. We write down 20 questions, send it over email. We record a 1-hour video with you over Zoom. We chop it up into 20 little videos, and then we release 21 blog posts, YouTube, podcast episodes. And as long as you have that niche expert who's adding real value on each Q&A, we've done 5 of those so far to create 100 pieces of content. And we're looking to really do that at scale as part of our plan to make that platform successful long-term. But I think that Family Office Club and commercialrealestate.com are both platforms where the real benefit of running it are the relationships and getting real deals done, right? Like having that one platform could lead to us getting, a couple $100 million in deals done that we otherwise wouldn't have seen or gotten done. So that's the real motivation, is to try to bring the marketing strategies to the commercial real estate space like we did with Family Office Club, and try to drive that forward over time.
Wow, that's great. All right, who else has a question?
I got a really simple and probably not bright one, but I'll ask anyway. How do you know when you actually have a niche?
Yeah, it's a good question. So there's a couple things related to that question. One is if nobody is in the niche, it might be because it's a bad niche, or because the past people who were there starved to death and now there's no one there. Or you could just be smart and the vision is accurate, but you're just early. So you need to have something else to pay the bills and keep the lights on. But maybe you should secure that niche as that market grows, but just not relying upon it for your day-to-day flow of money. The other thing is that if investors are asking for it and wanting it, then it doesn't matter as much if the competition is offering it. So it's better to pay attention to the investors more so than the competition, all else equal. And then the other thing is that if it seems like too much work to write a book or do a podcast or build the investor funnel, typically it doesn't mean that you're too busy. It just means you're not high conviction enough on your niche. Because if you have the right niche and you just imagine, what if I became the number one person for that niche? And you just imagine all the things that would happen for you if you could become number one. Just like with commercialrealestate.com, it's a brand new project. But if we could ever make that a top 10 website or community globally or in the US in that space, it would be worth 10 million plus, just like growing family office club, et cetera. Then it should be so motivating that you'll do whatever it takes to be number one in that niche. And that's all the homework part that people don't want to do. So you have the right niche when you get some market feedback and you can just have that gut feeling that however long it takes, I want to be number one in this area. So when people think of that niche, they think of me first, and I get to see the deals first, the investors get referred to me first, et cetera.
What are the kind of deals that you're looking for, Richard?
We've got about 300 investors that we have agreements in place with right now, and they have different direct investment mandates, but the most popular ones would be, we have a couple investors that are very active in hard money loans for like fix and flip or smaller commercial multifamily. We have interest in healthcare related real estate. We have several investors wanting to invest in medical office or just healthcare real estate plays, especially dental would be an area. We're looking at non-real estate. We're looking at some dental clinics and operating businesses that have reoccurring revenue, subscription revenue, or an operating business that's doing $1 million plus in revenue and is profitable. And on the real estate side, it's interesting because everyone always says to invest in things when they're down, but everyone's running away from office, thinking that maybe it's a permanently damaged space. But what they're chasing is industrial, multifamily, and self-storage. And the people who have good value add strategies can add value in any market, I think, to some of those assets. So, I don't think it's good to be switching gears and changing everything based on what the latest trend is. But we have enough investors that they're looking for many different types of things. And we only represent under contract 300 of the 2,500 that are in our greater community, because we just launched our RIA in January of this year to work with them on direct investments versus just having them in the family office club as investors. So we're just kind of driving forward those relationships in that part of our business right now.
Andy, if you get on one of Richard's mailing lists, he actually sends out those investor mandates, I think almost weekly or bi-weekly. So I'm always watching those because I'm curious to see what other folks are kind of looking into.
Yeah, I think a lot of investors are more comfortable if you are local or your property is local to them. I see that determining a lot of investors, closing in on a deal or not. And then I see Taiwo has a question here. What's your defined framework for finding a good niche? I think that if you looked over all the possible things you could do, maybe you have 5 ideas or 7 ideas, but then if you just stop for a second and think, what would be like, what investors have come in the most easily, and what investors do I have the most fun working with, and what would be the most profitable investors I could work with? And then you back into that and say, to get a deal done, they either need to know you, your industry, or be local to the deal. So if you can find an investor set that's all 3 of those things, or at least 1 or 2 of those things, then things will go better. And if your background is in healthcare or law or whatever your background's in, or if your location geographically is in a certain area that has a lot of investors, then you might want to create a private investor club for Chicago, or you might want to create a physician investment peers club in your area, or figure out, like, I've never been a doctor or a dentist, but I'm going after the doctor and dentist niche. So I'm not allowing that to limit my ability to make progress there. But you're going to get the easiest progress where you already have inroads, obviously, and have open relationships and can, get in there. But, I went to Oregon State University for my undergrad, wasn't born into like a super crazy wealthy family or anything like that, and worked my way into the industry. So whatever niche you want to go after, you could. It just might take a little bit more time if you don't already have those relationships,
Hey, Richard. So I've heard from a couple of syndicators that specifically target family office that it can be super perilous because they can leave you hanging at the closing table and they want to cut out your fees and, they want more control over the deal. But from a scalability perspective, working with a single check writer can allow you to grow and do multiple deals with just one person. And it's really valuable to create those types of relationships. Do you have any perspective, in terms of what I just said in regards to working, if you're a syndicator, is it worth going after if you're, you have the track record and you have the right size deals? Is it worth creating, spending a lot of time going after family office, or would you recommend just be easier to go after limited partner capital, like herding the cats, as you said?
Right. I mean, I think that there's also this in-between land of people that are worth 15 million, 25 million, 40 million. They might not have a big, fancy, formalized family office, but they might be able to write the $500,000 check or the $1 million check. That could be the sweet spot for a lot of people because there's more of those people. And again, they have less gatekeepers than the 100 million plus. So I would say to go after those, you could really, if right now you're getting $50,000 and $100,000 checks, learning about the family office world, so you can figure out where are the people wealthy enough to have a family office, maybe, and they're on the borderline, but they're much, much wealthier than who you're dealing with now, perhaps, like not you specifically, but whoever's listening to this, whatever level you're at, there might be another level before, like anyone who's worth 300 million plus probably has a single family office of some form in place. But a lot of these people between 20 and 80 million, 20 and 100 million don't have anything formalized, but there's tons of them out there. And there's 250,000 people in the world that are worth $30 million plus. And so focusing on those 200,000 that are under 100, but over 30 could be a pretty good niche for those that are scared of going to the more formalized family offices. It might be harder negotiators, but you only need a few of those to replace all of the investors that someone has built up over the years. So one of our investors that I represent, we sourced a deal for him in December. He's allocated 20 million to it so far, but he has LOIs for 256 million to allocate to that one investment sponsor, who before that was managing something around $100 million. But he was able to bring in this institutional capital source and his own capital. And then one real estate development firm I'm on the board of in Nashville, they didn't know what a family office was really. And they started coming to our events, figured out what it was, started using our investor databases, and they raised a $8 million check from a family office they kept after for a couple of years, and they raised a $40 million check. And what's interesting about them is they skipped the whole pain and suffering of going after private investors, which everyone else does that part first, went straight to family offices, and now they manage 250 million in assets with only 5 investors total, because they went straight to the family office. I don't know how they did that, to be honest, even though I'm on their board. Everyone else in the world I know goes to private investors first, and they slowly move up the ladder, but they just went straight towards the middle. I guess the top would be institutional capital, but that's what they did.
How long have they been in the business? Because I feel like track record is a big hurdle for folks who want to work with family offices.
Yeah, they've been in the business for eight years now in their current form. They had some experience before that, but in their current investment vehicle, it's been 8 years. And they're creative on their investment terms. Like you said, Ruben, they'll get pushback from investors. And on one deal, the founder, Meg, said, well, I really believe in this deal, so I'll give you a 15% preferred return and then no upside after that. Or we can do a traditional structure with a 7% preferred return, and then we'll split things 70-30 after that. And the investor said, oh, I'll take that 15% preferred return. And she ended up getting like a 3 times their money return, and she kept more upside than the investor. And now the investor has gone into 2 more deals with her under normal terms, but she was willing to give them these abnormal terms, but it worked out better for her than it did them because she had the goods. And, he was afraid maybe she didn't, or that her returns would be mediocre. Not all stories end that way, but, and I've had an investor say yes to a $5 million investment. And then while we were literally papering the legal agreement, the CFO said something dumb, kind of offhandedly, and then it blew up the whole deal. And then the deal didn't get done. And I'd spent like 3 months putting that deal together. It wasn't the only thing I was banking on, but, it was a big disappointment because they just changed their mind at the last minute. But that kind of goes with bringing in large checks, I think, It's definitely hard. It's definitely challenging. If it wasn't challenging, you'd be speaking to 3 cronies down from me right now, and I'd be on a beach somewhere and I'd be worth $10 billion, right? So it's very hard, as you guys all know. So I'm always learning. When I do our investor summits, I script all the discussion panels, and I'm constantly trying to get smarter at how do you use SMS for raising capital? How do you record a video for every pitch deck you do? Every teaser should have a video embedded in it and clickable to see a video tour of the property, or communicate via video and right click that Dropbox link and text message it to people to actually get them to respond to things when they're ignoring your email otherwise. And, using different strategies like that, I'm constantly learning something new because, obviously just like you guys, I'm not as successful as I know that we all could be if we knew what to do.
Well, I'm going to hop in here because Richard, you are a practitioner. 7 years ago, so 2013, maybe 2012, the end of it, you started posting videos on YouTube 7 years ago. If you go to the Family Office Club and scroll all the way to the bottom, you will see young Richard at Berlin, in Switzerland, in LA. I mean, he's all over the place taking video. And some of these videos have, 7,000 views. Some of them have 50 views. But I love the fact that you were out there, putting yourself out there, 31-year-old Richard, in all these different, locations, adding value. So I'm curious, because we are social media kind of folks. We use digital marketing, social media to raise capital. LinkedIn being a really big medium for a lot of people on this call. Where would you put your time? Is it YouTube? Is it LinkedIn? I mean, I posted a picture of some journals today and made some comments about how much time I've spent journaling, and that went viral and has 7,500 views, which is a lot for me on LinkedIn. And all these comments. But I'm curious, do you see an ROI on the YouTube videos, on LinkedIn the best? Where are you spending your time or putting content up?
Yeah, I think it's a podcast, mine and others, LinkedIn, YouTube, Facebook. I ignore Twitter. I'm really dumb at using Instagram. So I just focus on those 4 things. We've spent maybe 3.5 million on Google AdWords in the last 13 years, and maybe 800,000 each on LinkedIn and Facebook. But we have our operating business is part of that spend, not just trying to attract investors. But I think if you create content that's evergreen that you could use over many years, then you can put those videos inside of a book or a white paper, or you can do an email blast and use the video. And so you can use the content in many different ways. And the more videos you do on YouTube, the easier it is to do a podcast or to write a book. And if you write a bunch of articles, those can turn into a white paper, and the white papers could be chapters of a book. And then the easiest way I found to write a book is just to give a speech with 12 slides. And each slide, you give a story, a best practice, the biggest mistake you made, any other insights on that slide. And then after you give that speech 5 times, you record it, and then you can transcript it at rev.com. And then that's the draft of your book. And each slide is a chapter of your book. And if you know that going into it, what you're doing, then even if it takes you a year to give the speech 5 times, and one time's a podcast, and one time is like, a recording you do on like some webinar replay type software, et cetera, then that's the easiest way I found to write a book pretty quickly. And the book doesn't need to be long. People don't like to read. I've written a 600-page book, and I've written 80-page books. And you want them to actually read the damn thing, at least some of them. And so you want it to be short, and it's less painful for everybody involved. And then you use that content to get them from book, and you don't know who they are, to on your website. Now you can retarget them, or now they've opted in. And then the other thing I've learned with social media is that on Facebook, you know, if in the real world or the normal world in 2 years, we could do real conferences again. We used to target conference venues and then put a 1 mile radius around it and then turn that on for our demographic, age, and gender just during the conference on like Friday, Saturday, Sunday, and then turn it off to try to get in their feed where investors were congregating. And now we've used that to target neighborhoods where we know all the houses are $2 million, $3 million plus, and we'll target the male 40 years old and up to try to get the head of the households that are high net worth. And we had the founder of Minecraft come in with his baby stroller, who, you know, he sold it for 2.3 billion to Microsoft. And he came in because of one of our videos on Facebook and just came in and said hi one day. And we know it works, but again, I don't have it so dialed in that now I don't need to do anything in life, but it definitely does work. And we're always trying to learn how to make that work better and what appeals to investors and experimenting with that to get that formula down better.
Are you doing that in-house, or are you paying like an agency to run that stuff for you?
Yeah, I do it all myself just because I don't think that any cubicle jockey will ever care as much as I do about whether I actually got traction. And so A/B testing the ads, and I've read Perry Marshall's Old School AdWords Strategies book. And so I still do all of that myself, and I create most of our thought leadership. And then my team does almost everything else as possible, besides sourcing a deal or custom structuring a deal. And so it is time consuming doing that internally, but like I've learned so many lessons, like you guys probably have over the years, that it's hard to imagine outsourcing it. And if I give it to an employee, they might burn their annual salary in 1 month of a mistake. Like last year, we were spending on average $90,000 a month on advertising. This year, we're down to $30,000 a month. But if I mess that up, it's like a huge mistake, and then it just burns my bottom line if I mess it up. You know, so I guess I'm like a control freak when it comes to the spend because it's so high, you know. But we started with a $300 a month budget because I had no money to spend. And once I got an ROI on that, then we started another campaign, and then we kill the campaigns that don't work, keep the ones that do. And, you know, we had $0 to spend at the beginning.
Well, if you guys go over and check out the YouTube page, I've not watched all of your videos, but I put them on my YouTube TV up top and just let them roll a lot of the times. And you have a video that has 331,000 views, you know, and that's incredible. So, I mean, something, you know, whatever you did for that video, I don't know if it went, you know, viral or what, that obviously worked, you know. So, and then you've got one that looks like it was just a native piece about the summit invite that got 157,000, you know, views 4 years ago with you in front of an awesome, you know, building. I don't know where that's at exactly, but like you said, I think that, I mean, I have all these folks reaching out to me all the time, you know, saying, hey, we can get you this, this, and this. And it's like, yeah, but you got to spend, you know, 20 grand a month just to try to get something rolled up. And I need to understand the mechanics of that. And I love to hear that on the level that you're at, you're still doing that yourself. I got mad respect for that, man. So thank you for sharing that.
Yeah, I think one thing I try to do is think, you know, if I can keep my health in good order and just keep being prolific and always keep learning and stop myself from getting bored or distracted, then that's how I'm going to be able to beat the competition long term. You know, like Dan Sullivan always says, like, high performance is not that rare. It's high performance consistently over a long period of time is very rare. And then when you focus on a little niche and you say, well, who else is actually competing with me on this niche? Oh, only 3 other human beings on planet Earth. You know, can I outwork them and be just like 1% smarter and then just like work my ass off to get more pumped out? Then the competition, you're playing against 3 people on planet Earth once you niche it down to a position. And then you just be determined to crush them with helpful advice for your niche audience. Is really, like, Jeffrey Gitomer was one of my mentors growing up. And when I was getting my MBA, I read his book on sales, and he said, you know, give advice to your people who can say yes to you, give them something helpful once a week. And if you do that for 1 or 2 years, you'll be a local expert. If you do it for 3 or 4 years, you'll be a regional expert. And if you do that for 4 to 7 years, you'll be a global expert on that niche topic. But then he said in the book, that's the most valuable thing I've ever written in my 10 best-selling books, but I give it away freely, even though my competition could take that formula. But I know that no one's going to follow that advice because it takes a lot of hard work. And I remember saying to myself, like, oh, I'm the son of a bitch who's going to do that. And I didn't even know what a family office was. But then when I heard about family offices, I said, okay, this is something where there's like a gap here, and that changed my entire life. So that's why I like to tell that story, is just like that simple formula. No one wants to do that consistent hard work in a focused niche for a decade. Like Einstein said, oh, I didn't discover relativity. I just thought of nothing else for 13 years.
Yep. Yeah, I love that quote. And I love Jeffrey Gitomer. Little Red Book of Sales is on the shelf somewhere here. I don't know exactly where it's at.
Great.
That's a question that we'll kind of lead into. We've got about 5 or 6 minutes left here. Any new books, or it can be oldies as well. We've read a lot of the oldies, but we are looking for our next book, and we're thinking about, and I know you respect stories, and thinking about maybe doing Donald Miller's story brand book, but any other book recommendations other than the Gitomer book on sales that you would, that's caught your eye recently?
So one that really changed my whole life is the Robert Cialdini book called Influence. And like my whole business is based on that. It's all about authority positioning, reciprocation, commitment, consistency. And I think all of capital raising is building trust and commitment. And that really is fundamental to my whole business. But more new books, The Road Less Stupid is a really good book. I've read that one. I'll be reading that one again. Right now I'm going through a 3 or 4 year old book called Tribe of Mentors by Tim Ferriss. And I don't know how relevant some of that stuff is to raising capital, but it's definitely a very good business book. But honestly, I think that if you focus on, I know you guys are studying books like one at a time, so you need like ideas for a book to focus on, but like having a niche that you're always experimenting with, I've learned, I'm learning so much from the interactions with a niche type audience that I used to have this like self-improvement pressure to like, oh, I need to be reading a book a day, or I need to be reading a book a week, or, I'm like always trying to like pressure myself to hit my own KPIs that I make up, et cetera. And I've realized over time that if you're focusing on an exciting niche area, you're always learning so much and reading so many emails and digesting podcasts and interviews and reaching out to niche experts and niche investors that I'm learning a ton in my niche that's not written anywhere in a book as well, just by being in the flow of those relationships all the time. It's a different type of learning that replaced, I used to read like crazy, and I still go through probably 3 books a month on Audible, but I'm not under some like self-imposed pressure to read like, 50. And then the other thing I'd mention that's been super helpful is I have all of my, my monthly goals, quarterly goals, annual goals, all of my values for my family, as well as these little one-liner statements. Like I'll read a book like The Road Less Stupid and take away something that sums up the whole book to me, and I'll put it as a one-liner on this page. And I've got about 30 of those one-liners where all of us know if we actually ate vegetables all day and exercised every day, would be in great shape. But a lot of us don't do what we know we need to do, of course. And so I put that and I laminate it and I put it in my shower, and I read that every day at the start of my day as kind of my compass. And then I know my monthly, quarterly, annual goals. I've got like my board of advisors I made up with Gitomer's face there and Dan Sullivan's face along the bottom. And then I know like where I need to go in the world, and like other stuff that tries to distract me, it's easier to say no to once I've kind of brainwashed myself with that thing.
You make them watch you take a shower. That's hilarious.
Yeah. It's kind of weird when you say it that way, but
You sound like a beast though. That's awesome.
Yeah.
It's really awesome.
Yeah. Happy to trade notes with you guys on that type of stuff. If you guys have something else that's like changed your life in terms of habits or rituals,
So I have a question too. So like what you just said now, kind of hit me with family offices, and I go, damn it, I'm going after the wrong niche or the wrong area. I was saying I'm tech sales, and I want to position for tech sales because I was a tech sales guy. So it's easy for me to talk about this, but I hear you saying, oh, family offices, it's a little too much, but man, down here, there's all these beginning makers of a family office. And I go, shoot, I think that was the spot that I wanted to be in. Can you give me maybe some, or us, if anybody has the same thought, like tactical steps that we can say, hey, I'm not this far down the road. Like I just started commercial real estate capital raising 2 years ago, right? So I'm not that far down the road. How do I kind of back up or iterate, like you mentioned, like how do I positioned to this next new,
Right,
place that I
right.
want to be in.
Your background is in technology. Is that what you said?
Yeah, yeah.
Okay.
IT
What city
tech.
are you in?
Say that again.
What city are you based in?
San Antonio,
Okay, cool.
Texas.
So I think that one thing would be to consider the tech angle, but a lot of people obviously have become very wealthy in the tech space. I mean, Austin is attracting a lot of Silicon Valley talent. There's a lot of people that got shares early on of these unicorn companies. And one thing to start with would be looking at who has had an exit in the technology space who's local to you, and have somebody on Upwork.com start building a lead list of tech people who live in your city, and they're on the chairman of the board of a publicly traded company, or they're the CEO. If you go to the Inc. 500 and sort by tech, and then go and have someone on Upwork.com build a database of the name of the CEO of every tech company that's been in the Inc. 500 for the past 5-10 years, and build that Excel spreadsheet. Those are all going to be tech people. And then if you figure out their contact details and their LinkedIn profile, figuring out which ones are in the state of Texas at least, that would be something to consider. And then looking at what other tech type groups could be in your city. But if you think of other, if you also think who is local, who's worth 15, 20 million plus in San Antonio, that could be a second layer. So you could be really dialed into the tech people, but then maybe also go to family offices that you could meet with very easily that are right there in your city at the same time, as like the two areas of focus, perhaps, whether they're tech or not. There's a ton of people moving to San Antonio right now, and Texas is exploding with growth, so there's a lot of opportunity there. But I think using researchers on Upwork.com and then finding people who had an exit in the space, through press releases, through Inc. 500 lists, through acquisition lists that people, big companies talking about, like Google or Amazon showing all the 300 acquisitions they've done, et cetera, could all be ways to potentially attract investors there locally. And then you always want to look at it backwards of kind of like, where do they go day to day? What associations are they in? What events are they going to? If they have enough employees that you actually want to work with them, if they're going to be high net worth enough that they could actually invest with you on a meaningful level.
All right, guys, that is more than the time that we really allowed for. Richard, thank you so much. Richard, we all want to promote your work. So we have some people here with some really, really good followings and some platforms here. If we could help get your message out and share this, we would love to. Is this recording something we can all slice up and post and tag you in on social media?
Yeah, no problem at all. I mean, if I knew it was going to be public, I probably wouldn't have said I'm the son of a bitch, but whatever. Go crazy one time in my life. Maybe that'll make it go viral or something. Who knows? But, I think that that's totally fine. And I appreciate you guys following our work, and, not here to be a sales pitch, but you'll see on familyoffices.com, we have a workshop on Wednesday for 4 hours. And it's about how to work with private investors. If you have someone on your team that needs to get trained up on that, or would enjoy 4 hours of stuff that's different than what we just talked about, we've got that coming up, and events coming up all the time.
Awesome. Well, I'm a member of the certified capital raising module ever since I read the book. So I've been going through those on a slow basis. I'm at my own pace, but I appreciate the work there, because you do dive into these, these chapters, the 5 steps in depth there. So if you guys want to become a certified capital raiser through the Family Office Club, I highly recommend this content. It's Richard, some of Richard's best in my opinion. Richard, thanks again, man. I really appreciate you.
Cool. Yeah. Thanks, Logan. And I appreciate you having me on here. And, our whole model has just been giving away more than we take to build the business. So at familyoffices.com, we just have free books and just a bunch of free stuff just to check it out and get to know us better.
If I can just say something real quick, we listen to a lot of these just in general, and there's usually, maybe you're lucky to get one idea. I feel like we got at least 3 nuggets today. So man, I really, really, really appreciate what you're doing. Thank you.
Cool. Thanks, Andy.
All right.
Thanks for having me here. Appreciate it.
Thank you guys so much.